Let's welcome in Steve Chiavarone on Trading Nation. He manages Federated's Global Allocation Fund. A lot to talk about, Steve, not the least of which is that you have boosted your S&P 500 target, I believe, 2, if not 3 times lately. You're at 3,100 now. What makes you so optimistic?
Earnings. I mean, in one word, earnings. Earnings estimates rose all last year, and that was based on strong underlying fundamentals. And, you know, the tax rate, I mean, I don't think any of us, or certainly not most of us, were willing to model in a tax rate as low as 20, 21%. Most folks were trying to be conservative. But when you look at pick up in economic growth, the full impact of the tax reform boosts the earnings number, and you got to pull your target up to match it. So that's how we've gotten there.
Yeah, pretty incredible here. And I'm calling this the tide rally, TIDE, and I'll tell you why. Because you've got taxes, interest rates, DC, and earnings. Feel free to use that, by the way.
I like it. I'm going to use it.
Feel free. Just give me some credit. Taxes, number one, because to your point, and I've read some of what you've written lately, people don't realize that they're going to get a bump in their paycheck. Everybody in America, for the most part, is going to have a little more money in their paycheck in the next couple of weeks. You think that's going to set off another round or a little round of consume? Hey, let's go get that new TV we've been looking for, something like that?
I think that's right. You know, we're calling it the 4 stages of acceptance of tax reform. You know, the first stage of acceptance was that it was actually going to happen, and that helped boost markets at the tail end of last year. What we're going through right now is it's actually going to boost earnings, and maybe more than we had originally thought. And you see a lot of strategists falling over themselves to try to figure out what that right earnings number is. And I think in 2 weeks we kick off the third stage, and that is right now, you know, if you look at the Quinnipiac polls, only 20% of folks think they're actually going to get a tax cut. Well, the numbers are that it's going to be 80% of folks, and it's an average tax cut of $2,000. Okay, some of that's skewed to the upside, so the median's still $1,000. But, you know, for a lot of folks, an extra $1,000 certainly doesn't hurt. I mean, I'm not going to scoff at it, and I think that people aren't expecting that, and they are going to spend it, and they're going to engage in economic activity, and I think that's the third stage. I think the fourth stage is a little bit longer term, and that is there have been a whole lot of capital projects that haven't passed muster at the CFO's desk. The return on invested capital wasn't high enough, so it made sense to return capital through dividends and share buybacks. But when you cut the tax rate and you have immediate expensing of CapEx, there's going to be certain projects that cross the finish line. And we think that those are going to boost growth, boost the productivity growth of the economy, and that's nowhere near being priced into the market. So we're on stage 2. We think we're headed for stage 3, but we think there's more to go with this.
Yeah, you know, listen, get an extra $100 a month in your paycheck and be like, oh, okay, got a little more money. Maybe I go out to that restaurant or spend that money. I'm sure you've been getting questions about Bitcoin and other crypto. Yeah. I don't like to call them cryptocurrencies. I call them crypto commodities only because you don't really transact with them. They mostly you just possess them and then they go up and down in price. Although you certainly can. I could probably buy something with wheat if I wanted to as well. How many of your clients are asking you about Bitcoin and others?
More than I had anticipated when you know, a couple of years ago.
And what are they saying? What is it, or should I buy it, or both?
Both. You know, is it real? How to think about it? And you know, there's a lot of boilerplate answers on Wall Street that aren't all that thoughtful. It's, you know, it's tulips, or you know, it's very simply blockchain, not Bitcoin. So we really wanted to dig into it, and what we found is, you know, dismissing the currency is fine, but you shouldn't miss the value of blockchain. The currency itself isn't a great medium of exchange, like you said. It's not a great store of value. It has a fixed amount, so the Fed would have to kill it at some point because they wouldn't be able to engage in monetary policy. They can't increase or decrease the supply of it. But blockchain behind it, we think is more real than people are giving it credit. If the first version of the internet was an internet of information, blockchain is an internet of value. It allows for the digital transfer of files in a way that's verifiable. It digitizes trust. And that, forget about currencies, that could be revolutionary for supply chains.
Yeah. The way I explained it to my father was it's 1887, and blockchain is the tracks and Bitcoin are the trains. The trains may go away, right? Ethereum, like, who knows? They may change. There were hundreds of train companies 120 years ago, but the tracks will likely remain. The blockchain.
Very similarly, the way we explain it, which is in the same vein, is just like Pets.com was the first real online commerce company, and there was a lot of buying into that because people saw the value of online shopping. Pets.com wasn't the best version of that, right? We think that Bitcoin is the Pets.com of blockchain, to put it in kind of those terms. Now, what's difficult is it wasn't
But here's
clear
the
that when
thing. How about
online
this, Steve?
bookseller
'Cause
came
let's
around that they
go-
were going to win.
Let's go back.
So you don't know who.
Let's go. Let's go. I like the analogy. I guess the Bitcoin bulls would hate it, but
Yeah.
let's go back to the equity markets because that's what you do. Listen. Let's say Bitcoin goes away, or let's say Bitcoin goes to 100,000. I don't know. I think anybody with an estimate is really just guessing. How about this? Do you think Bitcoin is in any way tied to the equity market? In other words, if Bitcoin does fall further, would it negatively impact stocks, or do you think they are separate things and separate investors and separate people?
I think what's most interesting along that vein is it's the first sign of greed since the Great Recession. If you really think about it, investors wanted to be on the roller coaster in the 90s. They wanted high returns. They didn't mind volatility. The Great Recession put the fear in a lot of folks. They wanted to go on the merry-go-round. They wanted low vol. They wanted their dividend yield. Bitcoin really represents the first sign that there's some greed in the market, that folks really want to get on that risk train. Look, are there linkages? Probably not. I mean, most folks that I talk to, if they've got a little money that they don't mind losing, they'll throw it into Bitcoin. I don't think people are taking out second mortgages to buy it. If they are, then there's linkages. But I do think it's informative because it is the first real sign of greed. And I think it's indicative of rising risk appetites, which will drive equity markets higher, kind of almost regardless of what happens with Bitcoin.
Steve Chiavarone, really interesting and wide-ranging discussion there. Steve, thank you very much for joining us on Trading Nation. We'll see you again soon. Take care.